40 points is really significant because every 40 points that you increase your credit score, that is a new credit band. That means that you go from bad to poor or from poor to fair. Every 40 points means that you have better access to credit and cheaper access to credit.
If you have a bad credit score, you get bad interest rates, which likely means you're setting yourself up for not being able to pay them back or have some defaults, which then keep you at a lower credit score. And it's just a vicious cycle.
So here's the interesting thing to keep in mind. Let's say Ollie is where he is. What does he need a better credit score for, right? I mean, if he's not going to go out and get more debt, if he's stable where he is, why does it actually matter that he improves his credit score? Because if he has a personal loan right now, it's not like a better credit score is going to automatically drop his interest that he pays. That's just going to stay stable. But the reason it matters is check out where Ollie stands in terms of debt. And over the 18 months, 19 months, he was able to get it down to $13,000 because he was making his payments and he was paying it down. But here's the thing. Whatever debt he acquired when his score was 575 is almost certainly going to be a much higher interest rate than he can now get at 709, which means that whatever that $13,000 is, he should try to refinance it, go to another lender, find out whether you can get approved for a significantly lower interest rate. And if you can get a significantly lower interest rate on that $13,000, right now on the trajectory he's on, he's almost certainly going to take another 2-3 years to get out of debt. He could chop that in 6 months or a year by refinancing and putting more of that payment towards principal instead of interest.
And what's amazing about that is if he does that, it'll only make his credit score go higher, which means he'll even get lower interest rates.
Once he gets to about a 730 credit score, he's not likely to need a much higher one. He's probably going to get the best interest rates that you can get. So he's nearly to the point where he no longer has to worry about growing his credit score. He just needs to maintain it, and he needs to work on his debt payoff strategy. So he's really in a good position. He's done all the right things to put himself in a position of success for the near term and the long term.